Hey, good morning. Welcome to the morning brief. Today is Friday, June 6th. Thank God it's Friday. What a rough week. Yeah, trading's been very difficult lately. Directions not very specific, and yeah, the volatility's been nuts. Looking at the news from forexfactory.com here, you'll see we had average hourly earnings month over month were slightly better than expected at 0.4% versus zero point 0.3. That's a positive. Non-farm employment change was 139K, which was better than expected. Expected was 126. Previous was revised down to 147. Yeah, it's still a good number, positive. Unemployment rate stayed as expected at 4.2%. Again, that is positive. So the market pretty much liked those numbers. Yeah, moving on. Looking at the daily chart here, you can see that we are gapping up this morning as we speak, and that is basically the the employment news. So market likes that. That being said, we are right at the very top of this band. We've been talking about this bull flag for quite some time now. We're above the moving average. This is bullish. This is a bullish pattern. Usually a bullish flag will break to the upside. It hasn't as of this point, but we'll have to wait and see. Where could it go? If we could get above yesterday's high, 6,016, I think that low volume node at 60.58 or 60.88 could certainly be in play. If we cannot and we take out the lows, yesterday's low 59.30, we could probably very easily get into the 58.94 area or this low volume node at 58.30. So there you have it. Looking at the inventory yesterday, we had down price action, but we had distinct inventory increase. So this is more buy the dip. That has been the theme for virtually any day when you have a movement to the downside. You see a big reversal to the upside again, over and over. The buy the dip folks are in full strength. What happens when those guys get burned? It's going to get ugly. Maybe that'll never happen. You gotta be. Some people are super optimistic. I think we're just treading water until the fundamentals come back. The big macro events come back and the market reacts to those. That being said, right at the moment, it's bullish, so it's going up. Overnight action, nothing but up. Nothing but up. Total range is 66 points, so that's above average. Volatility is certainly here to stay. Where do we have support and resistance? You can see there's a confluence for resistance at 60.16, which is yesterday's high. Above that, we've got a major level at 60.33, 60.50, and 60.80. However, when I scrunch that up, it's really easy to see that there is a lot of confluence down here support-wise around that 59.31. Of course, 5,900 is the whole number, but there's also a little bit of an area between 59.12 and 59, let's say 59.15. We break 59, there is 58.80-ish area. Then we drop down, and there's a bunch of confluence down here at 58. Let's call it 58.37 for support. Stock Trader's Almanac for today is 38.1. 38.1. So we'll see how things pan out today from the Stock Trader's Almanac. Hope you have a great day and a great weekend. We'll see you next week. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.